Friends, this is the fourth class of that holding company. In the last class, we had seen the problem for 2021-22, the last year problem that we had solved, and in this class, I am coming with a suggested problem, very important problem for the forthcoming exam of 6th semester. Also, this problem has contained 6 adjustments, and at least 3 adjustment is going to click in the forthcoming exam, that is coming exam. So from this point of view, the problem is very important. And for other courses apart from BCom 6th semester Calcutta University, this problem is also important for CMA and CS. Right? So let us start with the problem, and I think you have gone through the question thoroughly. If you have not gone through the question, hope you will go through that, note down the question so that you will understand better and you continue to do the problem with myself. So friends, in this problem you have seen the degree. We will calculate the degree of holding. Degree of holding denotes how much percentage of shares are held by the purchasing company. If you go to the balance sheet, you will see the H Limited. H Limited is holding 40,000 shares in S Limited. So H Limited is holding 40,000 shares in S Limited. The total number of shares in S Limited is 50,000. So out of 50,000, holding company is holding 40,000 shares. That comes to 80%. So if holding company is holding 80%, automatically the minority interest comes to 20%, 100 minus 80. Friends, the next note for your understanding is pre and post acquisition. On 1/4/2009, general reserve was 1 lakh. This is the information given in the adjustment, and PL was 80,000. So general reserve was 1 lakh at the beginning. As on the date of acquisition also it is 1 lakh, and closing also 1 lakh. So there is no change. 1 lakh beginning, 1 lakh end. So in general reserve there is no change in general reserve. So whatever the general reserve profit, this is your capital nature, or this is pre-acquisition period. So all the general reserve are pre-acquisition period profit, because there is no increase in general reserve or decrease in general reserve, or you can say there is no change in general reserve. Right? Let us come to the profit. PL balance was, so far as your adjustment is concerned, on 1/4/2009, the first adjustment you will see the profit was 80,000. But out of that, interim dividend paid, that means it has already been paid at a rate of 5% by your S Limited. So this is the information in adjustment number 2. However, this interim dividend has been taken to holding company PL. This is things are, there are two cases. One is interim dividend paid. So dividend paid is 5%. Let us first discuss the dividend paid. Dividend paid is 5%. So 5 lakh, that is your capital, into 5%. So dividend paid is 25,000. Out of 80,000, if dividend paid is 25,000, the remaining balance is 55,000. This 55,000 increases to 1,50,000. This 55,000 increases to 1,50,000. So if we go for 1,50,000 less 55,000, then it comes to 95,000 is the profit for the year. And out of 95,000, pre-acquisition period 6 months, post-acquisition period 6 months. The pre-acquisition period is 1/4/2009 to 1/10/2009, that is 6 months. Here also 6 months. So this 95,000 profit for the year is divided between pre and post equally. That is 47,500. Here also 47,500. You can make a working note of this. So friends, during this period of 6 months, profit earned by the company is 47,500. After dividend paid, the profit was 55,000. If we add 55,000 plus 47,500, so as on the date of acquisition, profit will be 1,02,500. And during post acquisition period, that is from 1/10/2009 to 31/3/2010, the profit will be 47,500 post acquisition period profit. Right? With this fundamental, let us start with the step 1 of doing the problem, that is your analysis of profit. Friends, we are applying the most easiest technique so that you continue, you keep your attention with the easiest technique, and I think it will help you a lot. So let us start with the statement 1, that is your analysis of profit. So we will have the statement 1, analysis of profit. Here we will divide, let me prepare here, analysis of profit we will divide, this is your particulars. After particulars, pre-acquisition profit, pre-acquisition or capital profit, Then we will come to post acquisition, that is your revenue profit. That is your revenue profit, right? And this is your particulars. If we start with the general reserve, there is no change. So post acquisition is nil, only 1 lakh is here. This is given as per information. Then we will come to the PL, statement of PL. In the statement of PL balance 149, it was 80,000 minus interim dividend paid. The dividend is already paid 25,000. So your 55,000 is the pre-acquisition profit. Then from 55,000 the closing balance is 1,50,000. The diagram I had shown to you. So during the year 95,000 is the profit, and pre-acquisition period is your 6 months, so 47,500, and post-acquisition profit is 47,500. So profit for the year is your 47,500. Here also 47,500, right? Now there is a revaluation of plant and machinery that we will see. So friends, let us concentrate, make a note, that is your revaluation. Please read the adjustment. The adjustment is telling as on the date of revaluation, as on the date of revaluation, land and building revalued at 3 lakh, and the land and building is showing in S Limited balance sheet 1,80,000 as per question, and rate of depreciation is 10%. So friends, land and building as per 31/3/2010, 1,80,000 after providing 10% depreciation. So let us find out the cost. If cost is rupees 100, depreciation is 10. So 31/3/2010, it is 90. So 90% is equal to 1,80,000. This is the plant and machinery after depreciation given in your balance sheet S Limited. Please refer the balance sheet. And cost is 100. So how to find out 100? 1,80,000 divided by 90 into 100. It comes to 2 lakh. So plant and machinery was 2 lakh at the beginning of the year. So friends, if I take, this is 1/4/2009, your land and building, this is land and building was 2 lakh, and as on the closing date as given here, it is 1,80,000 and date of acquisition 1/10/2009. Friends, on 6 months during the year there was a 20,000 depreciation. During the year there was a 20,000 depreciation, 2 lakh and 1,80,000. So for 6 months the depreciation is 10,000. So on the date of acquisition, this is your date of acquisition, 10,000 is the depreciation here. So as on the date of acquisition, the book value of land and building is 1,90,000. This 1,90,000 is revalued for 3 lakh. Value changed to 3 lakh. So here revaluation profit is 1,10,000. 1,90,000 revalued to 3 lakhs. Therefore revaluation profit is 1,10,000. Right? So friends, this is very important information, and I hope this year definitely you will find an adjustment relating to revaluation of asset. Definitely this adjustment will be coming, right? And adjustment on dividend, either interim dividend or proposed dividend will be definitely coming, and in this problem interim dividend and proposed dividend, both adjustments are there. Therefore from this problem you will definitely get in become 6th SEM Calcutta University at least 2 to 3 adjustment as a common one. So revaluation profit, I will write here revaluation profit. This is your 1,10,000. This is capital nature, right? So if we add now revaluation profit, that means the asset value increased to 1,10,000 and 10% is the depreciation. So 1,10,000, 10% depreciation for 6 months, it is 5,500. This is the extra depreciation the company has to provide in the post acquisition period, because the date of revaluation is 1/10/2009. So during this post acquisition period, extra depreciation for 6 months which has to be given, and it is 5,500. So depreciation I am writing here 1,10,000, 10%, 6 months, it is coming as 5,500, right? So if we add this, it comes to 3,12,500. And this is your, if we add it, it comes to 42,000. 42,000, right? So the pre-acquisition total profit 3,12,500 and post-acquisition total profit comes to 42,000. In this case, the minor if we this profit, a part of the profit will go to holding company share 80% and minority 20%. Here also my holding company 80% and minority 20%. So if we deduct minority share, that is 20%, the 20% comes to 62,500. Here the 20% comes to 8,400. The holding company share will be remaining. Holding company share, it comes to your 2,50,000. And here it comes to 33,600. Right? So here holding company share is 2,50,000 and your revenue holding company share in revenue profit or post acquisition profit is 33,600. Okay, that is 80%. So this is your analysis of profit. Now I am going to cost of control. Second statement, cost of control. If we go to the cost of control, we will first take the value of investment, the cost of investment by holding company. Holding company purchased 40,000 shares in S Limited and the 40,000 shares cost is 6,20,000 as given in the balance sheet of H Limited. H Limited investment. So cost of investment, this is your 6,20,000 minus nominal value of share capital. The share capital is 4 lakhs. I am writing in the inner column. This is number 1. Number 2, I have told you the pre-acquisition profit will also go here. So here pre-acquisition profit of holding company share 2,50,000. Another one is your pre-acquisition dividend. Pre-acquisition dividend wrongly credited to holding company PL. This is your 20,000. This I will explain you right now. The pre-acquisition dividend interim dividend paid was 25,000. So far as the pre-acquisition dividend is concerned, let me explain you the dividend here. This pre-acquisition dividend is for the pre-acquisition period, and the pre-acquisition period is the capital nature. So the dividend is a capital nature. If the dividend is from pre-acquisition period, it will reduce your cost of investment. If the dividend is post-acquisition period, it will go to holding company PL, right? So this dividend 25,000 is the interim dividend. 25,000, and out of this holding company share 80%, 20,000, and minority share it is 5,000, 20%, right? And this 20,000 should be credited to cost of investment, but wrongly it has been credited to the holding company PL. So friends, if we credit the holding company PL, PL will increase, so we will decrease from the PL, we will decrease from the cost of investment. So friends, if there is a wrong, please deduct the pre-acquisition dividend from the cost to find out the goodwill or capital reserve. Now this 20,000 we have deducted here. Now it comes to 6,70,000, and if we deduct 6,70,000, the capital reserve negative balance capital reserve 50,000. So capital reserve is 50,000 that will come in the balance sheet liability side. Now we will come to the third statement, that is your minority interest. The minority interest. This minority interest will go to the liability side of the balance sheet. At the end it will be written. So minority interest, first we will go for share capital of S Limited. Minority holding is 20%. So 5 lakh into 20%, it comes to your 1 lakh. That is your minority interest. Then we will see the proposed dividend. Proposed dividend. That is your 5,000, right? Then we will come to pre-acquisition profit. Pre-acquisition profit, that is minority share 62,500 as per your statement 1. So this will be coming, and post-acquisition profit. Post-acquisition profit is 8,400. If we make a total here, it comes to 1,65,900. 1,65,900. Right? So this is how the minority interest will be calculated. The total dividend is total is 1,65,900. This proposed dividend has been given in the adjustment. We will show that dividend separately. Therefore, we have deducted the dividend here and it comes to your 1,65,900. Then we will come to your statement 4. This is the last statement, statement 4, that is your holding company reserve and PL etc. Right? In the balance sheet, if you go through the question, you will see in the balance sheet there was a capital reserve and the capital reserve was 1 lakh by holding company. This is balance as per balance sheet of H Limited. When you are taking this, please note that we will take the opening balance as per holding company. And the balance which have been given, this is your capital reserve, this is your general reserve, this is your PL. Right? The capital reserve balance is 1 lakh, the general reserve balance is 2 lakhs, the general reserve balance is 2 lakh and PL is also 2 lakhs. PL is also 2 lakhs. Right? Now we have to add Now we shall add the capital reserve. This capital reserve has come from the cost of control, that is capital reserve opening balance was 1 lakh and capital reserve is 50,000. Right? So in the balance sheet the total capital reserve will be 1,50,000. Then we will go for this is your pre-acquisition dividend. This pre-acquisition dividend 25,000 into 80%. This pre-acquisition dividend was wrongly credited to the PL of holding company. Now we will deduct this 20,000 here. Okay? So 20,000 will go out from this holding company PL. Then comes the unrealized profit. Then comes the share of revenue profit. The revenue profit, capital reserve nothing, general reserve, here it is 33,600. This will be positive. Then your unrealized profit. The unrealized profit, the goods transferred, here there is a adjustment. This is 4,000. This is your unrealized profit. We will come to this 4,000 here. This will be your minus unrealized profit. So if we make a total here, we will come to this will be your 1,50,000. This is your 2 lakhs. There is no adjustment, and this will be your 2,09,600. 2,09,600. This will be plus. This is 2,33,600 minus 24,000. 2,09,600. This will be the statement. All will go to the balance sheet. So in the balance sheet, capital reserve will be 1,50,000. General reserve is 2 lakh. Capital reserve 1,50,000. General reserve is your 2 lakhs. And PL is also 2,09,600. Right? Now let us come to the consolidated balance sheet. So this is the consolidated balance sheet we have to prepare. That is on 31/3/2010. This is the liability side. Shareholders funds, share capital. We will take the share capital of H Limited, that is your 10 lakh as given in the problem. In the balance sheet, it is given as 10 lakh. Then reserve and surplus. Capital reserve is 1,50,000. This is from statement 4. General reserve is 2 lakh from statement 4. In statement 4, PL was 2,09,600. But if we go for the adjustment, we will see the holding company is declaring proposed dividend 10%. The holding company share capital is 10 lakh, and on 10 lakh the proposed dividend is 1 lakh. 10 lakh into 10%. So the proposed dividend is 1 lakh here. So that will be deducted from the profit, the revenue profit of holding company. So the balance will be 1,09,600. In this way, the total reserve and surplus is 4,59,600. This proposed dividend we deduct it here, and we will also take the proposed dividend here H Limited. So we deduct here from the PL, we show it as a liability, or under current liability we show it here. Then secured loan, very simple, debenture H Limited, S Limited, total. This is from the balance sheet. Sundry creditor, H Limited 75, S Limited 50, mutual owing is 30,000. And if you can go to the adjustment, you will see The mutual owing debtor, creditor, mutual owing is 30,000. This is adjustment number 3. Sundry debtor include 30,000. That means sundry creditor also include 30,000. This mutual owing will be deducted from the creditor, will also be deducted in the debtor. Now it comes to 95,000. We will continue the liabilities here. So you will continue here. Proposed dividend H Limited is 1 lakh and S Limited we will take the minority share. S Limited proposed dividend is 5% dividend proposed, that is S Limited 25,000. Out of this 25,000 we will take the minority share here. So this is your 5,000, right? Because the rest 20,000, the proposed dividend of S Limited, please understand, the proposed dividend of S Limited is 25,000 and 80% is the holding company share, that is 20,000, and 5,000 is the minority share. This holding company share has been taken in statement 4. Here we have taken the holding company share 20,000 proposed dividend. Please remember. And this 5,000 is the minority interest share of minority interest. We are showing it here. And you have noticed from the minority we have deducted 5,000 as proposed dividend, right? Suppose we will not deduct from in the minority 5,000, then we need not have to add 5,000 here. In this case, the minority will increase by 5,000. Suppose you will not show here, then we will increase it and it will be 1,70,900. Either way you can do it. So friends, you remember that proposed dividend of S Limited is 25, 80% will go to holding company PL in statement 4. We have added, and the minority we can take here, we can take here. As you like. If we can add here, we can take it here. Either one, right? So I have taken here 1,05,000. Then bills payable, it is H Limited 40, S Limited 20. Mutual owing in case of bills payable and bills receivable is 20,000. So 60 minus 20, it comes to 40,000. Minority interest we have calculated 1,65,900. So liability side total 22,65,500. Now we will go to the asset side of the balance sheet. So this is your asset, tangible asset, land and building, H Limited. It is in the balance sheet 3 lakh. You can refer this 3 lakh. And in S Limited it is 2,90,000 and depreciation is 5,500. This we have to provide. So the resulting figure is 5,84,500. This is your resulting figure, right? Then plant and machinery, H Limited 5,75,000, S Limited 5,05,000. Total comes to 10,80,000. Then inventory, that is stock, H Limited 1,20,000, S Limited 50,000. unrealized profit 4,000, 1,66,000. So far as unrealized profit is concerned, if you go to the adjustment number 4, the stock includes 25,000 in S Limited, which has been supplied by H Limited. Profit is cost plus 25%. So unrealized profit will be 25,000 into 25 by 125. If cost is 100, profit is your 25, then transfer price or sale 125. So in 125 profit is 25 and the unsold stock is 25,000. We have to take 80%. So the unrealized profit comes to 4,000. This unrealized profit is deducted from the stock. It is also deducted in statement 4 in the holding company PL. Now this comes to 1,66,000, right? Then we will go to the data. Asset side continue. Now we will go to the data. Data is very easy. H Limited, the data is 2 lakh. S Limited 1,20,000. This is 2 lakh. S Limited, it is 1,20,000. So it comes to 3,20,000 less mutual owing. That is your mutual owings. The mutual owing is your 30,000. So this is 30,000. So 2,90,000 is the data. Now we will come to the cash and cash equivalent. Cash and cash equivalent. H Limited, as per balance sheet, the cash is 25,000. S Limited, it is 15,000. Total 40,000. This is your cash and cash equivalent. Now bills receivable. In bills receivable, H Limited 75,000. H Limited 75,000. S Limited 50,000. Mutual owing, that is in bills payable it was 20,000. In bills receivable also 20,000 is to be deducted. So total 1,05,000. This is your bills receivable, right? So total comes to the asset side total. If you make a total, it will come to your 22 lakh 65 500, 22 lakh 65 500. This is your 22 lakh 65 500, right? So this is the balance sheet, and out of this 6 adjustment you will get a lot of common in the forthcoming exam. Friends, if you like the video, please subscribe and offer your valuable comments. So we will again continue the holding company, and I shall come out with some more problems so that you will get 100% adjustments in the forthcoming exam as common, so that you will not find any difficulty in answering the question. So meet you in the next class. Keep in touch with the subject. Thank you.